Welcome back to Excel Labs video number 5, Financial Accounting Part 2. In the first part we have finished the balance sheet for the 31st of December 2011 and we have opened the balances in our asset, capital and expense and cost of goods sold and sales accounts, and we have already recorded 8 transactions and are now ready to close our accounts. First and foremost, let's start with the sales, cost of goods sold and expenses account. The reason behind that will be that we need to take care of one more information in our instruction sheet. This information reads: estimated corporation tax is 20% and is calculated as a percentage of net profit. Now, net profits is the result of sales minus expenses minus cost of goods sold. So therefore it makes sense to close those accounts first and then calculate the corporate's tax using it. Let's start with the expenses account. The expenses account, the first one coming up here, and we want to calculate the balance which goes towards the profit and loss account. Now, how do we do that? Basically, we need to subtract the smaller side of an account. In this case, the smaller means the smaller sum, the smaller totals of the values from the larger side. Larger means the larger total of the values. In this case, we have no transactions here affecting the credit side of an expense account. We do have a few on the debit side, so that's actually quite straightforward. And now make sure to select the last line on the credit, means within the T account, not here. Here. We're closing the account on the 31st of January 2012. This goes against the profit and loss account. Now we let Excel do the rest for us. Basically, we need to define that the sum of the larger side, this is the sum of the larger side, and make sure to catch all the cells in there. Do not catch this cell. There we need to calculate another sum in a minute. Close this minus the sum of the smaller side. And now make sure to just select these cells. Do not select this cell with it, because then Excel will not be happy with it. Close this. Now let's look again at the formula. We are subtracting the sum of this side, debit side in this case, and the sum of the credit side from each other. Hit enter. That's 5,670. Now let's balance the accounts. This is why these cells here should have been avoided at first. Now we don't. We take the full sum again of everything above. Click enter. Now, of course, you could argue, alright, why should I type? I can use the Autosum just did before. Let's do this as a test. Now you see that it would only select this value. This is not quite what we want, because it might happen that another transaction comes up. We would type the transaction in there, and then we would not be considering anything, would not consider this in the sum. So it's better actually extend this just in case. Yeah? This is a just in case scenario, and balance the account. Now let's put this into the profit and loss account. It's right here. Now the expense account has been credited, therefore we need to debit the profit and loss account. 31st of January 2012, expenses, and now we make our life a lot easier, we just refer to that value as a reference. Yeah, you can also type it in, but you can also refer to it directly, which would make sense for closing the accounts down. Therefore, expenses, refer to that cell, and enter, there they are. Let's do the same with the sales. The sales, we've only recorded 20,000 on the credit side, so we are also quite quick. Make sure to select the last appropriate line. This goes to the profit and loss account. And again, we select the sum of the larger side, which is here, minus the sum of the smaller side. Yeah, just to be consistent. 20,000. Just like before. Now we balance the accounts just as we did with the expenses. We select the sum of this side, 20,000. And we go to the other side, credit side, sum of the credit side, also 20,000. So you see there should be a pattern emerging, but don't worry, we'll do this a few more times. Cost of goods sold. Select the last appropriate line. Profit and loss account. The sum of the larger side, which would be here, minus the sum of the smaller side, which would be here. Close. Press enter 8,000. This is exactly what should come to pass. Before we transfer this to the profit and loss accounts, let's balance the account out. Therefore, the sum of this side, so you can use the mouse pointer, you can also use the arrow keys, it's up to your personal preference. Same here, and always check if the sides are actually really balanced out. They should, but double checking in accounting is always a good treat, good characteristic. And now we're going to do the same as we did with the expenses, with sales and cost of goods sold. We have debited the sales account right here. We need to credit the profit and loss account 31st of January 2012. These come from the sales, and we refer to that exact value right here, 20,000. How about the cost of goods sold? They have been credited here, 8,000 going to the profit and loss account 31st 2012. Cost of goods sold, and we refer to the 8,000. So far so good. As I said earlier, we started with those three accounts because now we can calculate the net profits and therefore calculate the corporate tax. Now, let's first consider which accounts would actually be affected by corporate tax. Well, the profit and loss accounts would need to be debited with corporate tax. We're not paying a corporate tax right away, so there would be no cash in bank or cash in hand affected. We would owe it to the state, in this case to Her Royal Majesty's Revenue and Customs Service. Therefore, we are going to put this into accounts payable. It's a liability. Yeah? But first we need to calculate this. So let's go to the accounts payable. Right here. 31st of January 2012. Profit and loss account. Let's make sure to say this is tax. Now how is this going to be calculated? We need to take the sales minus the cost of goods sold minus the expenses. Now this would be the net profit. Don't hit enter yet, because then you would basically put the whole net profit into the accounts payable. That would make no sense. But before we do that, we need to multiply it by 20%. Therefore, make sure to select the brackets, put this in brackets, and then multiply it by 20%. Now, if you put it in that format, don't forget the percentage sign, otherwise it will be completely wrong. Let's hit the enter button. Let's check the results right here. 1,266 are the profit and loss account corporate tax. So let's put this right here. 31st of January 2012. Accounts payable tax. And link it to the accounts payable tax position 1 to 26. Very good, so far so good. Now let's check if there's anything else missing for the profit and loss account before we can balance it. Not really, we can close the accounts, nothing else there. Therefore we need to balance it. Now which one is the larger side? You can check with a pocket calculator, of course, but the sales are much larger than expensive cost of goods sold and accounts payable. That's very good for us. So we're making net profit, we know that, yeah. So again, we take the sum of the larger side, and again, it's recommended to do the full larger sides, the credit side in this case, minus the sum of the smaller side. There you go. Hit enter. Oh, just put it in the wrong spot. Let's do it again. Good exercise. Sum of the larger side minus the sum of the smaller side. That's much better. 5,064. Now where does this actually go? Well, this goes against the balance sheet. There you go. Let's close this account down. Let's balance the account. Sum and the same on the other side. Sum and there you go. So now we're going to close the all the other accounts. Let's start with the asset accounts. let's check what has happened. Well, with the license, and we will basically do the same thing now again. The license, nothing has happened, therefore the opening balance will be the same as the closing balance. But again, to be consistent, take the larger sum minus the smaller sum. $15,000. This goes against the balance sheet. And this one as well. 15,000. How about the vehicle? The vehicle also goes against the balance sheet. It will close all the remaining accounts against the balance sheet, so the balance. And again, you know how to do it by now. The larger sum minus the smaller sum. Yeah, so this is what we're going to do in the next few minutes. Close the accounts. Fittings for the first. Balance. Sum of the larger side minus the sum of the smaller. We are fairly quick now because it's always the same procedure. Same here. The sum of the whole side right here. Go to the accounts receivable. Now let's check which side is the larger side. This is this side, therefore we're going to send this against the balance. The larger against the smaller. And in this particular account we have looked at before, we know that the balance has decreased now because we have received a payment, which is why this balance is now smaller. So do the same as I did with just all the accounts. Close all the accounts down. We'll go through the balances in our beginning of our third video, and then we can actually close the balance sheet and the profit and loss statement on the third sheet.